Hello and welcome to another Impact Insights. I'm delighted to have with me today Louisa Sedgwick, Managing Director of Vida Homeloans. Hi Louisa, thank you for your time.
Hi Dale.
Just so audience should know who Vida Homeloans are, but do you want to just tell us who you are, what you do, and sort of the markets that you serve, please?
Yeah, absolutely. So as you've already said, I'm Managing Director for Mortgages at Vida Homeloans. I've been there since inception, which is great. Vida, what do we do? So we serve customers that fall off the high street, in effect. So those customers that might have personal circumstances that dictate a specialist lender, or alternatively, they might be buying a quirky property. And again, they look for a specialist lender. So, our ethos is to make sure that we can provide a safe home for as many people as come to us, really.
Sure. And it's the specialist market, I think, at the moment is definitely one that's on the increase. Over the last sort of 6 months, we've all had our own challenges. How has it been for you guys, and especially with regards to funding and bits?
Yeah, so it's been a tough gig, I have to say. So we had to close our doors in March, as you know, largely because we had a securitization that was ready to go in April. So our buckets were full, in effect. So all of our funding lines were full, and the securitization market closed. So we had to sit on full throughout the majority of that period of time. We managed to get a deal away in July, which was following the deal that Kensington did. So they kind of opened up the market for the rest of us to follow closely behind. So we managed to do a securitization as the capital markets reopened in July, and then of course we came back to market in August, since which time it's just been with a bang. It's been phenomenal. We kind of sat throughout the months of March and beyond, wondering whether or not the brokers would remember us, wondering whether or not our key distributors would remember us. We tried to maintain contact as best as we could through that period of time, but actually it feels like we've never been away. So we're immensely grateful for the support that we've had since we returned.
Sure, and absolutely, and especially with the Impact team, you were our #1 lender for September, so well done on that basis. To come back from doing not a lot over the last few months to being our top lender is very impressive. And with that in mind, you really hit the buy-to-let side when you came back and started running almost straight away on the buy-to-let side. It's very buoyant at the moment. The reports do suggest maybe that this is the time for the professional landlord rather than the single buy-to-let purchaser. What do you think?
Yeah, so it's a really interesting one because I've started to look closely at the stats as you would imagine, and to see the sorts of volumes that were coming through. We're still seeing circa 65–70% of our business coming through on single landlords in single type family dwellings. So yes, we still see a lot of HMOs and we see a lot of MUBs. They tend to be more of a limited company sort of SPV role, but we're still seeing a lot of first-time buyer, first-time landlords, and as I say, those ones that are just starting their journey as far as their portfolio piece is concerned, which is why we launched the Vida Flex product, which is the 5-year fix with a 3-year ERC. So if smaller landlords are just dipping their toe in the water and don't want to commit for a long term, then that gives them an alternative. But also some of the larger landlords who like to move their portfolios around and draw down against them, etc. Again, it gives them a bit of an edge. But yeah, we're still seeing the individuals still buying. It's still very buoyant.
Okay, that's really positive. And you mentioned there we have a lot of portfolio landlords who like to buy and have a 3-year plan and then remortgage and take funds out of it later on. Are you seeing a lot more in a limited company name than personal, or are you seeing a bit of both with regards to that last statement with regards to first-time landlords and stuff?
Yeah, again, both. As I say, the bigger landlords that are more professional and taking on the HMOs and the MUBs and are adding to the portfolios are absolutely doing that under an SPV. But the smaller ones that are dipping their toes in the water are doing it in their own personal names. And there's no right or wrong way of doing it, providing they go away and get the right advice. So go and talk to a qualified accountant, not just the mortgage broker, as we know, Del. We've had these conversations before. Providing they go away and talk to the right advisor based on their tax circumstances, then there isn't a right or wrong way of doing it. It's just whatever's suitable for them, and then obviously the mortgage advisor can give them the right advice based on the tax advice that they've been given.
Sure. And do you think that's really becoming a very specialist area now? The whole buy-to-let entity has always been deemed some sort of specialist, but do you think it's now more than ever, especially with regards to the rental calculations on a property, and it can be 125%, 145%, pay rate, no pay rate, higher banded tax, pay a lower basic rate taxpayer, and so on and so on. Do you think that puts a lot of people off, or are they actually more encouraged now to go to a broker to find that advice?
I think it's absolutely the latter. What is it? 97% of all buy-to-let mortgages are placed through brokers, as opposed to the early 70s, which is the normal. So, you know, it is a broker-led proposition without a shadow of a doubt. So the complexity, whilst it might be difficult to understand and get our heads around, it just lends itself to the brokers supporting those customers. Because if we can't do it and we're in the industry, then, you know, your Mr. Joe Blogs in the street has got no chance. So complexity is difficult, and it drives maybe a little lack of confidence. But ultimately, if they have an aspiration to own within the private rental sector, then, you know, the complexity drives them towards a mortgage broker, which is just spot on.
Which is great news for everybody.
It is.
And do you think buy-to-let is going to be a big part of your plans for the next couple of years? As I think first-time buyers are going to, I know there's some government schemes on the go, and they're going to save the first-time buyers and so on and so on, but realistically, first-time buyers are going to struggle for a long time yet.
I would absolutely agree. So I say what we've seen since we've returned to the market is it's been a slight imbalance towards residential, which is unusual for us because we would normally be around 30-70 in favour of buy-to-let. It's actually getting more towards a 50-50 split within residential and buy-to-let, but I think that's just as a result of stamp duty, land tax, holidays, and, you know, people taking advantage of the market. So buy-to-let is definitely still a strong part of our proposition. It will continue to make sure that we evolve more into that buy-to-let world. I think the thing that we're toying with at the minute, and it's probably, you know, coming out within our product proposition, is whether or not we do stick to the landlord that is just tipping, you know, starting their journey, the non-professional landlord, or whether we look after the professional landlord, or actually, can you do both? And that's the bit that we're looking at the minute, which means that our product proposition will evolve in line with our appetite, really.
Okay. And did you see a big influx of obviously the wording was just totally wrong, of mortgage payment holidays from existing landlords and bits? Did everybody rush to take these out, and how do you look at them now that they're coming back to apply for mortgages again?
So who doesn't love a holiday? I mean, I certainly do, and I've missed them this year. Horrendous, absolutely horrendous, because it was just so badly communicated, and of course it was done in such a short period of time. So I think we had something like 48 hours to implement a payment holiday scheme. You know, and we're a small lender by comparison to the big guys. We implemented a digital solution, which meant that the customers could literally apply straight away, because at no point were we told that we could interrogate these customers to see whether or not it was the right solution for them. So of course we passed through the payment holidays, and yes, we had a lot of payment holidays. We're now down to a third of those, which is good when you've seen the payment deferral extension. So the wording has changed, which means that people are less inclined to want to take a holiday. We saw lots of examples where landlords and residential customers just chose not to pay their mortgage because they were told that they could. And we've had a number of instances where they saved the money from paying their mortgage to save up for a deposit for their next buy-to-let, as I'm sure that you probably have also stumbled across these customers. Seen a lot of customers that are applying to us now who have maybe taken bounce-back loans, again, because it was a cushion, they're nice to have, as opposed to the fact that they actually needed it. So, you know, we will accept people that have had a payment holiday. We will accept people that have been on furlough. We will accept people that have had a bounce back loan, but we need to understand why. So it's not just a, you know, because you chose to have it, that's a really good thing. It's not, because that then would question the longevity of the commitment to that mortgage, and actually whether or not they want to sustain the payments going forward. So yes, we are looking at each case on a case-by-case basis, and we will lend to those that have felt the need to take advantage of some of those schemes as an indirect result of the coronavirus, and not as a choice of lifestyle.
Yeah, if they got a good reason. No, fair enough. That's good. And just regards to valuers, how are you finding? I mean, are you concerned? Obviously, we're on the verge of area lockdowns, and following Boris's comments over the last couple of days, we'll see certain areas completely locked down. Are you concerned that valuers might be able to get back out to properties? And what are you going to do if that increases, that problem increases?
Yeah, so I mean, we've seen, I think that the landlords, the valuers, apologies, have done a great job at maintaining any level of service within the industry.
Absolutely.
So I think, you know, I commend them for all their hard work, which I think is great. We're seeing probably delays of about 8.5, 9 days from instruction to actually accepting the instruction and then getting the valuation booked. So there is an immediate delay. And I think that's pretty similar across the industry. So I don't think that that's just bespoke to Vida. I think we're all suffering from the same delays, but as a result of backlog, etc., etc. If we go into local lockdown again, which I think it's inevitable that we will, we're looking at alternative solutions, so digital type solutions that might well support some of the lending that we do. It's unlikely that we'd do a digital solution based on a very high loan to value product, because of course you do need that inspection, the actual inspection. But anything that falls within the low loan to value areas, then we could potentially look at a digital solution, or there's some solutions available that are desktop that then have photographs of the inside of the properties, for example, or videos that link within the desktops. And because of GPS and everything else, we know exactly where everybody is, as we know at any one time in the UK anyway. So we can prove that it's the right place to do it. So we are looking at alternatives. The challenges that we face and other specialist centres will face as well is whether or not their funders are keen for those types of solutions, and whether or not the capital markets will accept them in a securitisation pool. So, you know, you can do these things and they're great and they're very innovative, and this, you know, they support a solution, but you have to make sure that every part of your process is comfortable with them. The rating agencies typically will downvalue a mortgage or a pool based on the fact that it doesn't have physical valuations, but it might only be a part of it. So we have to think outside just supporting a service proposition, how that then is impacted through various parts. The traditional lenders don't have that, of course, because they lend their own money or their savers' money, but certainly the specialist lenders will all have the same challenges.
Yeah, okay, fair enough. And whilst we're sticking with valuers, we're seeing a rise in cladding, and specifically the requirement for EW1S forms. We had one recently where the EW1S form could only be signed off by a certain individual, and there's only so many of those in the country. Let's say there's only 60 with over 1 million properties that need actually signing off. Have you come across that within Vida as yet? Do you think it's a problem that's on the horizon, especially as it's relating to new builds as well, not just the existing cladding properties?
Yeah, I think it's a massive issue, and it's not going to go away anytime soon. We have it as one of our killer questions. So when we ask the questions in the first instance, it says, you know, does your property have cladding? Is it likely to need additional inspection? At which point the chances are we'll probably decline it, because we don't want to go through this process of customers having to do that. If they say it's got cladding, but they can say, yes, it's had the form, it's had a formal inspection, we're very comfortable with it, then that's a whole different ball game. But if they're buying something in the first instance, and the chances are that we would probably decline the application up front because it doesn't necessarily fit our requirements. And I think that is probably the direction of travel for a number of lenders, which is not the right, you know, I'm not suggesting for 1 minute that's the right way to go. I think there's some communication breakdowns. I think that this needs to be reviewed, and not just at lender or distributor level. This needs to be reviewed at government level to say, you know, how can we better improve the process around this. I think the worry bead that I have is more around the customers that are stuck in properties that maybe want to move or remortgage, and they can't do that. So I think that is a bigger, it's a bigger challenge. And actually, those properties are worthless in effect, because they have, you know, the cladding issue. So I do think that it's a growing issue, and I do think that it needs to be addressed sooner rather than later.
No, it's a really good value point, and it just astounds me how many properties are sitting there at the moment without the relevant sign-offs. But let's get back to some more positive bits. Help to Buy, massive at the moment, and I think that's part of the volume that we've been doing with you guys, is all around Help to Buy. Big part of the business at the moment, and obviously we're all trying to get in as much Help to Buy business as possible before all changes in March next year. Are you seeing that across the board?
Yeah, it's we would traditionally have done up until before lockdown. We would traditionally have done about 8 or 9% of our business would have been Help to Buy. So it's always been a big part of our business. We're ticking up towards 20% now, so it's more than double what we would typically see, which is great. You know, it's a good thing. At least we're trying to help people to get onto the housing market, which is it can only be brilliant. What's going to happen at the end of March next year? I'm not entirely sure. I think that we will potentially fall off a little bit of a cliff edge, but I know that there are some schemes that are being built in the background, some of which have been supported by the government as well and by the local builders to enable them to take over from the Help to Buy proposition. Actually, the ones that I've seen are very good. So I think that there are some alternatives that will become available at the end of March next year. And of course, it'll still be available for first-time buyers. It's just going to have wider restrictions on it and minimum property sizes and various things like that we all think probably need to understand better than we do today. So there's still going to be a market for Help to Buy, and we'll still support it. And the Scottish First Home Fund, again, we've had a lot of business from the Scottish First Home Fund because we're one of the very few lenders that will lend in Scotland and on that particular proposition. So yes, it's a big part of our portfolio. Yes, we want to continue to support it. And you know, why would you not? And a number of affordable housing schemes that are likely to come to the market again. We tend to want to embrace those and move forward with them as well.
I think they're all good in their right mind. It just depends on whether they will work and get the traction that they all need, especially to help first-time buyers. That's the biggest thing at the moment.
Exactly. The difficulty will be the confusion that they bring about. So, you know, if you've got 10 or more schemes, which we've had in the past, if you recall, you know, these wonderful government-based schemes that MHCLG had out for a long time. So I think that if we go down that route again, it causes confusion, and that's not going to work. Whereas if you've got a very plain vanilla scheme that we've had with the Help to Buy scheme, I think that will work.
Yeah, of course. And you're into, well, as you know, we're well into the adverse side of things. We've always dealt with clients who have had credit blips and everything else, and it's good to see that you've got a nice appetite for this. Is this going to be a big part? Because there's quite a big gap between what we're starting to see now, obviously, is people coming out of 6 months with struggling with bills and so on and so on. And we think this is going to increase, the adverse is going to increase over the next 6 to 12 months. So we see people come out of furlough and unfortunately get made redundant and so on and so on. Again, is this big for your plans in 2021 and moving forward?
Yeah, so I mean, we're looking at our risk appetite. Obviously, what you don't want to do is you don't want to go into high loan to value products with significant arrears, for example, because that kind of doesn't work, and it's not supported by the way in which we're funded. But what we're looking towards doing, and I think we're not the only ones, I think other lenders will get into doing this more, is risk-based pricing and risk-based bespoke product offering based on not just the customer, but based on the property that they want to buy as well. So we would typically have, we may have a customer that's got 2 or 3 defaults, or maybe has a CCJ, for example, who'll pay the same price of mortgage for somebody who just wants to buy a flat above a hairdresser's. Yet they might have a very clean credit history. The risk to us is actually probably greater, the resale value on the property on the flat above the hairdressers, as opposed to the customer that may have had some credit issues in the past. So what we need to do is we need to start to think about how do you weight your credit risk appetite against customer as well as property, etc. So we're undergoing a lot of work to transition into doing something that is more bespoke to the customer. So in answer to your question, I suspect that we won't go up the credit risk curve. What we will do is we'll make sure that any product offering that we have is appropriate for that customer.
True complex and specialist by the sounds of things.
Yes.
And what's your just with that in mind, what's your views for the remainder of this year on volumes throughout the marketplace, and what do you think will happen in Q1 next year as well?
So I think that the market, assuming that we can get everything through by the end of this year, which is going to be the major issue, in so much as, you know, the offers might well get out there, but the conveyances are all at the end of this long pipe that we've all been part of, then, you know, can we get the completions over the line at the end of this year? I think that's going to be quite a large challenge. I think we'll end up probably about 235 billion this year,
Okay.
so not too short of where we were last year. Next year, I think Q1 is just going to be insanely busy. And then I think that the brokers will take a deep breath into April and May.
We'll have a holiday in April.
They might well have a holiday in April.
Allowed.
Any broker worth their salt will not have a holiday at Q1. So if they all like skiing or going to fancy Caribbean resorts, I suspect they probably want to stay at home. They might actually be desperate for a holiday by then. I know I probably will be, but I think that the Q1 of next year for brokers is going to be so buoyant. And then I think it will fall a little in April. So my advice to brokers, as it would be now, is to start to think about, what are your CRM systems up to date? How are you contacting your customers? Because actually into April and May of next year, you're going to have to turn your attention back in the same way as we did this year to remortgages and PTs, because actually that's where the business is likely to be until the market finds its feet into probably June. And I think the purchase market might kickstart itself again in June once it's had a little bit of breathing space, and actually we find where the property prices land, because I do think we might see a little bit of easing off of property prices in probably the latter or second half of next year.
Okay, that's an interesting view. And we haven't really touched on technology, but what I will say is that I managed to place a case, dip it, and actually submit the whole thing myself. So your system is pretty good in that respect. If I can do it, anybody can. Is that a big vision of yours at the moment, to invest in IT and make it as easy as possible for us to do business with you?
So without giving too much away, we have just signed a very big contract with a company called Zoot, who supports the likes of Apple, Amazon, etc., and do all of their very algorithm-based automated solutions. So we've just signed a contract with them to service us for the next 3 years, and so we are looking to re-platform to them and take all of some great new technology with us. We will have something at the start of next year which will support some of the back book customers, and then at the latter part of next year we'll have all being well, we'll have a new originations platform which will be fantastic.
Very good. Sounds exciting. Well, I'm conscious of time. Thank you for giving us your time. Have you got anything else you want to say to our audience before we sign off?
So the only thing that I would say is I put my IMLA hat on as opposed to my Vida hat. We've done some research recently of our members, or 43 of them, about the issues that they're facing as far as the capacities are concerned within each of the lenders, and how that's then impacting on the service that they're offering to brokers and to customers. And one of the biggest things that's taking the time to get to the point in which they either instruct the valuation or whatever they need to do as part of their process is the way in which the case is packaged. So if you or your brokers coming through Impact get it right first time, then you could knock as much as 9-10 days off your process. And if you're in a race against another broker, which invariably is happening quite a lot just at the minute, with individuals vying for the same property, if you get it right and you know your customer well, then you will get that offer out quicker than the next guy who's potentially your competition. So I would just say, just take a little bit of extra time to think about how you're packaging a case, and you package it right first time, and then it will go smoother and you'll get your offer out a lot quicker.
That's really good advice. Louisa, really enjoyed that. Thank you very much for your time.
Thank you.
And thank you for watching. There'll be some more of Impact Insights coming soon. In the meantime, keep well and stay safe.